The South African Reserve Bank has put interest rate cuts on hold. The six-member Monetary Policy Committee decided to keep the policy rate unchanged at 7.5%, with 4 members for the decision, while 2 were in favour of a 25 basis points cut. Business reporter Ntokozo Khumalo has the details.
Interest rates are unchanged at 7.5%. The SARB's Monetary Policy Committee made the decision with 4 members in agreement, while 2 members opted for a 25 basis points cut. While the domestic economy has enjoyed a few months of rising confidence, Governor Lesetja Kganyago says the global economy is not on a stable footing.
The world economy is experiencing extreme levels of uncertainty. Trade tensions have escalated, and long-standing geopolitical relationships are shifting abruptly. In these circumstances, the global economic outlook is unpredictable.
The Reserve Bank also warned that while inflation has stabilized below its mid-target, it is keeping a close eye on developments. The General Workers' Union of South Africa, meanwhile, calls for the SARB to start slashing interest rates in line with the current inflation rate to safeguard jobs and wages.
The primary purpose of interest rates must be to protect the real value of workers' savings, pensions and wages, not to inflate profits for a banking cartel that rigs financial markets to profiteer from speculation and manipulate the rent. Current rates, which are kept artificially high under the guise of inflation targeting, have catastrophically failed the economy and burdened many working and middle-class people.
However, the governor says there is no certainty inflation will remain at current levels and that policy must be adjusted accordingly.
The only certainty we have on inflation is the previous one. We do not have certainty about what is going to happen in the future. And that is why you saw that, like most central banks now, we presented scenarios to say that there are these scenarios, and if this scenario plays out, this is how we think it will impact on inflation and growth. And if this one plays out, this is how we think it would impact on growth and inflation.
In the statement, the MPC outlines that reaching a prudent public debt level, further repairing and strengthening the network industry, and keeping real wage growth in line with productivity gains are just some of the factors that would help improve economic conditions. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Pretoria.